Jobless claims, non-farm payrolls, consumer price index, and producer price index, retail sales, factory orders, housing starts, trade data, employment trends tax are all of the data delays that will be seen as the government is now shut down. But today we did get a report. U.S. private companies unexpectedly lost 32,000 jobs in September, well below expectations of a 52,000 gain, marking the largest drop since 2023. Meanwhile, August private payroll number was revised down from 54,000 to negative 3,000. Gold is at all-time highs. Silver basically testing all-time highs. Yet the SPY alongside the safe haven assets is trying to run to all-time highs along with even crypto. We saw $330 million worth of Bitcoin and Ethereum shorts liquidated in the past 24 hours. So there's no question that market makers are hunting for short liquidations right now, which could trigger short squeezes. We saw a liquidity injection, 5 billion in quantitative easing injected into the banking system overnight. It's probably nothing. This is actually pretty big. It shows that the Fed is going to step in anytime there is uncertainty, but it also shows some underlying issues. The fact that we got this horrible report today and the market is rallying shows a couple of things. It shows that Fed is likely going to have to cut rates, and people are going at this thinking that this is huge for the market because it means quantitative easing, it means liquidity being injected into the market, and overall that is completely bullish. But it doesn't underline the underlying factors of possible recession risk. And now we won't even know if that factor is even a factor. Reason being is because we aren't going to get the BLS report on Friday. And we also might have a delayed CPI in October. So what does this all mean? Well, it means as of right now, markets are risk on with the thought of liquidity being injected coming into October, but also liquidity actually being injected overnight last night. So what does this all mean? Well, there's a couple of ways to look at this, and in my opinion, it's partially what Trump does. If Trump decides to put pressure on a government reopening, aka getting rid of this government shutdown, if he's trying to apply pressure there, what that likely means is that there's good data and the markets are probably rallying purposefully. If he is not worried about the government shutdown and decides that delaying a government shutdown is completely cool, then that means that the data's probably bad. And once we get a reopening, a government reopening, we would likely see a sharp sell-off in the markets. Now, another thing people don't talk about is the last times that the government was shut down, the S&P 500 has rallied. So investors actually welcome a government shutdown to actually happen. But once that reopening occurs is when we could see that sharp sell-off. So let's talk about it very quickly. Let's talk about the overall market real quick before we jump into GameStop as well as AMC. SPY's at 665.89 currently, basically flat on the day after it rallied. We are somewhat flat, but the chart looks pretty good. We base off of this level after gapping and wicking below in pre-market trading this morning. SPY is trying to hold its own, decent volume, but overall, this still to me seems like a delayed rally until a sharp correction. And this is essentially what I'm looking for. I think that the reopening or some sort of data will come out pretty soon, and the market will stop holding up on pure faith coming into the October rate cut possibility. And I think we are due for a correction. Following that correction, we have a sharp rebound, sharp rally. But overall, I would not get trapped as a trader in betting to the upside on the market. I have a bias to the downside currently, and even then, that is not confirmed just yet, but I do still have that bias to the downside. I would be very, very careful. This is also a very similar scenario we saw back in 2021 when a lot of the same things actually happened. And you can see that right here. The market gets choppy before selling off a little bit harder, and that's essentially what I expect. Choppiness before selling off a little bit harder. Now, AMC Entertainment announced elimination of $40 million worth of debt. It is not a huge catalyst, but it's a little catalyst. And it's a little catalyst that keeps the stock green. AMC has been building a base on the 50 on the RSI, which is basically the mid range on the daily time frame, and the chart is set up pretty perfectly to what we have been tracking. And I believe that AMC is right on the verge of a massive rally along with GameStop. So overall, we are seeing risk on in assets and a liquidity pump. Well, that sucks. You just said you expect to sell off, but you expect a rally in these meme plays. This, to be clear, is what I'm expecting, and I have not deferred my opinion from yet. Sharp correction, rebound, sharp rebound. That is the same thing that will carry over all the way into our plays. Right now, I just don't understand why the market has not panicked whatsoever or went risk off whatsoever, especially seeing what's going on in other sectors. But overall, you can see AMC's chart looking beautiful, prepping for this leg up. In my opinion, first level we're watching is 335. As far as GameStop goes, we broke above that $27.35 level that we have been fighting for. We rejected off of it back here on the 22nd. Then we rejected off of it right here pre-market on the 30th. And then right before close on the 30th as well. And today we came above it. We're building a base currently before hopefully another leg higher. We want volume and a possible catalyst to occur on GameStop. But let me give you another look. GameStop has broken above another resistance level and built support at this level. This candle, theoretically, this candle or the candle after should realistically fill this gap. This gap that I'm talking about is the gap up to 2830, 2845, which I believe will be the case. And I have a couple of scenarios drawn out for GameStop right here. Basically, bullish scenario, squeeze scenario. You come up, you pass 32, you pass 36, you pass 42, you come to 52, and eventually beyond that, you're in a squeeze setup. That is a bullish case scenario. Neutral scenario is, I believe AMC fills the gap, 28.45, consolidates, retests all the way up here, this liquidity pocket at 34.60 or 34.40, and that will be likely the top. Neutral. That's the neutral possibility, and I believe that will be the case if we don't get a squeeze. Bearish possibility, we continuously reject off of this trend line, maybe get the gap fill by late October before selling off even further into a bear market winter. I don't think this is going to be the case. In fact, I want the squeeze setup. At minimum, I think the neutral setup, and then what I don't expect is the bear case scenario. GameStop also cooled off on the RSI and came all the way down to 53, 54, and continued to rally, heading for another pump right now. The last time GameStop cooled off on the RSI and headed for another high, you really can't see. Most of the time when GameStop actually sold off and crashed below the RSI, we basically just saw a hard move down for a while until rallying further. And we see that right here. We see this sharp move down, cooling off the RSI. Right here, RSI dropped after being overbought, cooled down, and then ended up climbing higher. We could be in the same sort of setup right now where GameStop is going to chop higher. But again, I expect less chop, more of an easy, smooth sailing. But you got to remember that most of the time when we see the RSI get overbought, the stock cools off OD. And this time we didn't see that. We're seeing the stock remain resilient and want to push higher. So that is a beautiful thing to see as well. Overall, guys, we have probably one of the most interesting weeks of the year happening right in front of our eyes. And shout out to anybody who played Nike because it's still up 5.5%. We all well, whoever followed, we got into calls on in Discord on Nike earnings. I also added more shares yesterday in the long term. I'll have an update video on the long term for you guys pretty soon. If you're not subscribed to the channel, make sure to subscribe to the channel, turn post notifications on. As always, what do we expect? Because things get complicated throughout the video, and I kind of just want to make sure that the people watching who are kind of just wondering the simplicity of it, the simplicity of things, is that right now crypto shorts are being liquidated, and we could possibly see higher highs, but there remains caution behind the scenes of a very sharp dip, because the underlying effects of the economy are not well. The same thing goes for the stock market. We remain somewhat bullish from a technical standpoint, but the market looks heavy, the government is shut down, and data is bad. So again, it's technically bullish with hyper caution currently on the market. And if you are ready to take risk on in this environment, then bearish bias, because there's that bear caution, that caution to the downside. I would not be betting calls, and maybe we would rip. That's okay. I just believe that if I were to play this, it would be prepping for a downside move, and I'll stand by that. That is it, guys. Make sure to join my Discord server. It's the top link in the description. If you're not in yet, we are getting new members. We need to get it lively in here. Again, be patient, follow trade setups, and check the alerts that we get in the Discord, and Discord will pay for itself. It's pretty simple. The link under that in the description is my custom indicator that you can add and use on your TradingView charts. You can go get it for free. That is it, guys. I love you all. God bless. Lottery stocks out.